Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. This is going to be the first in a new series that we are doing on this channel where we are going to be looking at Bitcoin technically. This is going to be a price analysis video and a video series. We may, and let me know in the comment section if you want me to cover more cryptocurrencies and not just Bitcoin. The reason that we focus on Bitcoin, of course, is because it's a very good barometer for how the overall cryptocurrency market is doing. If Bitcoin's having a good day, typically the rest of the market is, and vice versa. But this is going to be very technical. It's going to be a price analysis video. We do daily cryptocurrency market updates where we look at external markets. We do cross-market analysis. We look at the dollar. We look at the S&P. We look at inflation stats. We look at sort of the general macroeconomic stance and where the cryptocurrency market finds itself in. We also do a little bit of TA in that video, but this is going to be a strictly technical series that we're going to run every single day this year on Bitcoin. And if you guys want me to add some more altcoins in, then I will do, and we can of course timestamp it. So maybe we do Bitcoin, Ethereum, BNB, whatever altcoins it is you guys want me to cover. But this is hopefully going to help you navigate what is a very treacherous market. Now, we're not going to get every single direction right. But one thing that I have found is I'm rather good at predicting the price over a short term, couple of weeks time frame, and that's what we're going to try and do to give you guys a sort of good overview of what the market is doing and where it's going. And right now we're starting on a 3-month chart, so this is a quarterly chart. Okay, and the reason that we're starting here is because, of course, it is a new year. It's a new yearly open. And it's important for us to track this because we can use this to look at where we closed last year and are we higher than last year's close or lower? Because this is going to really, if we're lower, your momentum's likely you're looking for downside targets. If you're higher than last year's close, then you're looking for those upside targets. And last year's close is right around the 16,500 mark, ladies and gentlemen. So we are going to pay attention to this. I have alerts. I already have a working chart, but I'm going to sort of turn this into a working chart for you guys and for the purpose of us doing these videos daily. And we definitely don't want it that enlarged. And we will probably take that on the bottom side because, of course, we're above it, so we don't want it getting in the way. So this is 2022's close, round about 16,500. Now, this is going to be important as we go on because we're going to use this. Okay, right now we're above it. We're going to look for those upside targets, and they're going to come into line and be more drawn out when we dive down the timeframes. So we'll move down to a monthly, and you should always, when you're doing technical analysis, guys, even if you're a scalper, you always want to do those broader timeframes. Potentially not the 3 month or the month or, even the week, but even the daily is something that scalpers, every scalper I know will look at the daily time frame to give them some sort of a metric or a compass of where they are and where they think the market's going. So they can be on the right side of the market with whatever scalps they're taking. Dropping down to the weekly now, guys. We had said a number of things, and I want to just actually pull up the RSI here, which is looking rather messy. The RSI essentially, for those of you that followed me last year, you'll know that we actually called for a rally from around about 15,500. We didn't know exactly where it was going to get, but we chopped the levels up. All the way up, it eventually went to 18,300. So that was a whopping little move. And that was essentially called via this weekly divergence that you had in regards to the RSI. And, of course, Bitcoin's price. So you can see Bitcoin's price was indeed putting in lower lows. However, the RSI is putting in higher highs. Or higher lows, sorry, I should say. So this is a divergence. This shows that maybe, this can show that a trend is vulnerable to change. It can show a number of things. But it isn't what I would call, on a weekly time frame, a valid divergence to suggest that the broader trend, which is this downtrend, perfect example of a divergence, a bearish divergence, by the way, ladies and gentlemen, was here. You've got lower lows on the RSI, but you've got higher highs on the price action. This is very much still an intact downtrend. And this bullish divergence, I believe, has actually played out. And we're likely going to see that, and remember this, guys, because this is how I'm looking for this market to end. Something where the RSI comes down and actually puts in a new historic low. Could come down to the sort of 20 sub 30 region. It's already been there before, the sort of low 20s. In order for us to, maybe see something like this where it puts in another low, and then we see that continuation. We get that bullish divergence again. But this bullish divergence is what essentially led us to that rally. Now, is that rally over? Well, I think it's kind of played out, but the problem is now we've got the start of a new year. What's going to happen? And this is why we have our range that I've actually rather brilliantly deleted on the time frame. So we'll put that range back on, guys. It's around about 16. We'll put it on perfectly, actually. Let's do this. And then this was, of course. So this is 2022's close. So right now where we currently are, we're going to drop right down the time frames to the daily. We are above it and we're finding it as support. So there's a couple of things going on here. We've obviously put in this new low. This, of course, was the FTX spill. Called for the rally up here. And you are now just chopping. You're in a very much a range-bound environment. But there is, for me, a structure that I would probably long here. And that is this double bottom formation. You will see this double bottom formation absolutely everywhere, guys. It's actually a very tradable pattern. You can see here. This is technically a swing low, okay? And you've got this running all this liquidity that would have built up on this support here. It's clear support, only for it to then come back up, trade back into that range before seeing that continuation. So looking at this right now, you can see, for example, you had one here, nice rounded bottom. This plays out all the time. You can get triple bottom, double bottom, whatever it is. I would probably be biased to look for upside. Now, because, of course, the traditional markets haven't yet opened this year, it was, of course, Sunday yesterday, it's a bank holiday today, and tomorrow they will open. We're really yet to see. We'll see tonight what the futures market comes in like, what the FX market comes in like. We're really yet to see what direction the cryptocurrency market is going to take, because it ultimately is moving perfectly in sync with the traditional markets. Now, if anybody's wondering what time frame my chart is set to, it's set to UTC 5, basically, -5. So that is the New York time zone. The reason that I do that is because as a day trader, as a trader, you need to watch time zones, you need to watch time frames, because these, look at it almost like as unlocking liquidity. When America wakes up, largest market in the world, there's going to be a lot of liquidity flowing. It's probably going to take a direction or, do something in some sort of a weird manner, and vice versa. When I wake up in the UK, I check what the sort of price action's been in the Asian markets, and then I look for, obviously, the London markets, and then go through to 2:30, which is the opening of the US markets. However, typically I start an hour prior, and would call that the American session, because you get a lot of news out at sort of 8:30 over in America. But where are we right now, and how are we going to get any kind of a barometer of what's actually taking place? Well, what I always like to do with my charts is look at day ranges. So this was the 1st of January. Remember, this is a daily chart, guys, and we are going to drop down to the hourly. In fact, we'll do that now. This, of course, is the 2nd of January, which has just begun. And then we can look, we can go even further back to the 31st. And we can kind of see, is there a trend currently in place? We'll just use the previous 3 days to kind of go by. Where are we at here, guys? Okay. And what we're going to do is we're going to map out swing highs and lows in regards to an intraday range. So we've got our yearly open that we're currently holding, which is the nice red line through it. We're then going to go, and we're essentially just going to do this. We're going to look for levels where the price has traded to, and where it's traded from. So this, of course, was the low the previous day. Not sure why I've got that set onto that. There we are. It's completely messed up our lows here. And this is what we're looking at, guys. So each one of these little sections is a day. And this is bringing us on to the current day that we are on. So right now, it looks like we're in an uptrend. Okay? So you got a succession of higher lows and you got a succession of higher highs. Right? And we can keep going and we can keep going back here and we can chase, you know, prior trends, what they were looking like, and so on and so forth. You should always chop your charts up, because if you're a day trader, how the hell are you supposed to navigate the market? You need benchmarks. You need kind of points of reference to guide you in your direction in regards to which way you think this market is going. You can't just look at, I mean, you can just look at a naked chart and get price action. In fact, that's often what we do in terms of patterns. But, you know, this you could argue potentially was where you had your directional change. This is what I'd call a swing low. Very common that you run all this liquidity. So this has obviously been long-standing support, like we had previously mentioned. People will expect, traditional technical analysis sort of predicts that when you reach support, it doesn't go below it. Okay, it's this kind of imaginary line in the sand. However, the market makers, the people that take money off traders every single day, know that that's how people think, and they'll do the opposite. So moving forwards and chopping this up, I would say right now you've started a short-term uptrend. Now you are running into a lot of resistance here. These wicks are showing you sell pressure. Hopefully you guys are enjoying this video because I'm just sort of setting up, you know, how I think the day is going to look and potentially the week. But I've got to be totally honest, the week is largely going to depend on how the dollar opens and the US market. We've got no indication of that as of yet. However, we will get tonight. But as of right now, anybody that knows any kind of technicals will say that this is looking more like an uptrend than a downtrend. And the real test for me is going to be, where does this pull back to, or does it not pull back through it? So currently right now, this is the day's low, taking us into tomorrow. And this is the day's high. And isn't it funny that you've actually came back to yesterday's high point and you found your support there? So potentially you're going to get something like this, where you're going to run into this area of liquidity. I don't know how many of you guys like or follow the ICT trader. He speaks a lot about order blocks. Potentially you're going to run into this liquidity. And here is perhaps where I'd look for that long setup. So it doesn't even have to run into it. Potentially you've already ran into it. But this is essentially where, forgive me guys, where I'd look for this long setup in this box here. If you're going to go long, obviously if you fail it and you take this out, then you've got a bit of an issue, because this is obviously the day's low. And you've also ran the previous day. But I would essentially look for some sort of a pullback into here and look for that upside continuation, maybe into the futures market opening tonight. And that's a big warning, guys, out there for anybody that wants to trade this. You do have futures opening tomorrow. So you need to be very, very careful of that. Or tonight, sorry, because if the dollar comes out strong and the S&P comes out weak, Bitcoin will largely, you know, it will likely do something like this, where it will actually invalidate this low. And it could do something like this where it trades back down into this range. So as it stands right now, my bias is long on the day. You know, we've got that nice weekly or nice yearly open that we're going to be monitoring as we move forward. You know, you got your yearly open at around about 16,500. And whilst we're above that, we're looking for upside. When we get below it, we'll look for downside. Downside targets as it stands right now is really coming out and taking these lows. But we'll assess that when we get there. On more of a day trade, inter-trade basis, we'll see what exactly sets up here. We looked at potentially that daily scenario for some kind of a double bottom here. Also gives credence to our long bias, which means that we have a long bias on the daily. And we will see. However, remember, you know, and this may play out because there's no traditional markets open. Remember tonight, so later on tonight, for me, it will be around about, I think, 11 p.m. Onwards, you will get the futures market opening. So if you get a strong Dixie, expect that downside for crypto or throw a wobbler. And also if you get a weak stock market, expect downside. So all I've got for you in this daily technical Bitcoin price analysis. If you've enjoyed the content, like is always appreciated, so is a comment. And look forward to seeing each and every one of you in the next YouTube video. Thanks a lot for watching, ladies and gents.